A lower day in grain and livestock futures on Wednesday. Chip Nellinger, Blue Reef Agri-Marketing, joining us. And we had kind of a commodity-wide risk-off day. How much of it was tied on Wednesday to this Argentina economic shakeup, Chip?
Yeah, I think the majority of it, Michelle. I really do believe that the news out of Argentina really spooked the grain markets here. In the short run, I don't know that it really matters or affects us much, but it was sure an excuse today for the funds to hit the sell button across the board on the grain market. So I think that you could give a lot of excuses out there for why we sold off in the grains. I think at the heart of it, it's 100% about Argentina and the currency devaluation that they saw there late yesterday afternoon and kind of in the overnight hours.
The Fed chose to take a pause on Wednesday, Chip. That was another thing we were watching, but the dot plot says that they're going to start cutting rates in 2024. What does that mean for ag commodities?
Yeah, I think in general, obviously the stock market took that news really well. We're, within shouting distance of all-time highs in some of these stock indices. The interest rate market sharply lower today. And probably more importantly, how that affects our commodity markets and our ag markets is the dollar. And the dollar was sharply lower as well. And so, as interest rates trickle back lower, that makes us less competitive in the world market given yields, and that is negative to the dollar. And so theoretically, as the dollar continues to drop, that can be something that supports all commodities. As it relates to your initial question about Argentina, it's kind of a race to the bottom. And unfortunately, from that perspective, just looking at Argentina specifically, they beat us to the bottom with this devaluation. But for the rest of the world, Japan, Mexico, some of our major buyers, a weakening dollar might be something that can, garner a little additional support and demand on the long side of the grain markets here. It's not an overnight fix. It's going to be something that's weeks and months in the making. But generally, if the Fed's going to continue to be kind of on an easing standpoint now going forward, at least not raising interest rates, that should be something that's negative dollar and help support commodities.
Hopefully it will bring some money back into the commodities sector, though. Thanks for joining us, Chip Nellinger, Blue Reef Agri-Marketing. We'll have more Ag Day coming up.